Welcome, ladies and gentlemen. Welcome to another session of the Church of Trader Travis, where we're preaching the gospel of investing in the stock market, earning income, spending as little as 10 minutes a day. Obviously, I haven't had my morning coffee. I'm not right in my mind. And that shows you I spent way too much time in church as a kid, which is entirely true. I grew up in one of those Bible thumping families. It made me kind of cynical towards the church. We spent like every day there. We couldn't watch total side tangent. But anyway, like we couldn't watch like TV. Like the only thing I could watch was one Christian show called, I think it was Fred Price. And then we couldn't listen to music. It was called devil music. So I grew up in one of those households. I had my rebel stage. And so for the people who, in rebel stage, and I saw the cynicism, like, oh, I quote all these scriptures to you, but I'm abusing my kids or I'm treating my family like crap. But I smile and I'm like Mr. Perfect Angel in front of my church buddies, right? I'm like, whatever. So for all the people who kind of turn their backs on the church, trust me, I totally get it. I get the cynicism. But don't fault the church. Don't fault, I guess the core of whatever religion you follow. Don't fault the religion. Fault the people. It's the people that's the issue, not what they're teaching. Same with the stock market, right? You have people who say options are risky. Don't fault options, or they say 90% of active traders fail, which no one's ever been able to prove that to me, but we'll just assume it's true, right? You can't fault active trading, fault individuals, because options and active trading is just a tool, right? A car is a tool. You can give a very fast motorcycle, you can give a motorcycle to a person who's responsible driver, right? They're going to drive the motorcycle responsibly. And then, somebody that's young and arrogant, like how I used to be, would flying down a highway 150 miles per hour. Well, that kind of person is reckless. It's only a matter of time before they hurt themselves or someone else, right? You can't fault the motorcycle. It's not the motorcycle's fault. It's the person who's using it. So anyway, I don't know where all that came from, but I'm back with another weekly recap. My partner in profit, my Reverend Deacon Dr. Peter, my partner in profit, he's not here. He's out at a golf tournament. So you just have me today. So everything, of course, that we always talk about, everything is for educational, informational purposes only. Our mission is to show, average individuals that you can succeed at the stock market if you put in the effort and time to work and get good at it. And that's another thing I get. I've been helping out one of my buddies. He was in my wedding, and he's struggling, all over the place. But he's consistent. He's consistently trying. I will say that. But he's inconsistent as far as finding something that works for him, or inconsistent showing up. And so for all the people who've been trying to learn how to invest and succeed, and it's difficult, trust me, I get it, right? It's difficult. The trading itself, succeeding at trading, is simple, right? What's hard is mastering ourselves. For my buddy's example, the other week he was, all excited. He called me. He's like, "Hey, I made these trades, and I'm a horrible friend. You don't want to be my friend. Like, I have issues, right?" And so he was super excited, and like in my brain, all I'm pointing out is things he could have did better. And then so I just blurted out all this stuff, and he's like, "I was all happy that I showed up," and I was like, "Oh, I'm so sorry, man." I was like, that's the first thing that should have came out of my mouth, is congratulating you for showing up. But all I want to say is I get it. I see him struggling. I remember I've been through the same thing he's gone through, which I told him. I said, I get it. I might not seem like I get it. I said, trust me, I get it. Everybody who succeeded has to go through this messy middle, right? You have your vision. Hey, I want to rich. I want to click buttons, make money from the stock market. I want to succeed as a trader. Then you have the messy middle, and then you have the success, right? Where Peter and I are at, where we make it seem easy, but you miss the messy middle. And so the messy middle is kind of where my friend is at. I asked him, "Hey, did you increase your net worth by about 3 to 5% in the last month or so?" He's like, "No." I was like, that's why I'm trying to get you to master the art of showing up, because the stock market went up that far. And if you had actually just did what I told you to do and just invest, you would have made more money. But he's trying and getting distracted by all these bright, shiny objects. He's like, well, I meant to. And I was like, yeah, I get it, right? While you meant to, somebody else actually did it, right? And that's the key. And that person who actually did it is the one who made money. But I get it. In the beginning, it's hard to master the art of showing up. People think it's strategies. He is quickly finding out it is not strategies, right? Strategies are simple in concept. you just implement them. The hardest part is mastering the art of showing up, the mastering the art of consistency, and in pushing through the messy middle, pushing through our failures and things like that. So I'm trying to work with him to create a strategy that compensates for people who have inconsistent, inconsistency with showing up. I'm sharing that with you all next year as one of the things. Since we're not going to be doing these recaps next year, I decided, let me just share with the public, how I'm helping like my friends or things like that, how I'm creating these strategies that don't require you to look at the market every day, right? You don't need to pull up charts and things like that. What if, he's taking care of his ailing, like me taking care of an aging person, right? And he's taking her to appointments and he can't get to the charts. Creating a strategy that compensates for that, right? So for example, we're looking at the S&P right now. Let's finally get to the charts here for about 4 more minutes before I let you go. Let's get to the charts here. So who would have predicted that the market would have raged higher and be at 309? I didn't, right? It's been in a channel most of the year, but it's gone up. And so we need a strategy that, like most people I talked to thought the market would fall, right? A few weeks ago. I didn't meet many people who thought it would go up. I don't remember anybody actually who thought the market would be at 309 here in the middle of November, not even I. So we need strategies that can put us in a position to make money when it goes up. But also, if we are wrong, that is where we are protected. All right. So, let's think about a buy and hold, right? So just going back to I get everything, the cynicism towards the church, how difficult it is, have these dreams. But yeah, it just seems like it's so much work, and it is a lot of work. That's a lot of people don't tell you. It is a lot of work, right, to succeed, but it's worth it. So even buy and hold works, and I get it why people are turned off by buy and hold, but it works really well. But guess what? It's not buy and hold's fault that people can't stand the pain in a market crash and then they sell at the absolute worst time. It always is at the worst time. Then the market rages higher and they miss out on that profit because they sold, right? So again, going back to the church, don't fault buy and hold, fault the person. Buy and hold works. And that's why I'm creating strategies that like factor in reality. The reality is there's going to be a very small group that are getting to the point where they're consistently showing up, right? There could be a very small group who can stand watching 40, 50, 60% of their accounts go down in value. Very small group can do that. I'm there now, but it took a long time to get there. So what I'm trying to do is devise strategies around reality, which is why I teach the concept of, hey, let's insure our portfolios. Yes, I've heard some gurus bash on my concept of buying stock insurance, and coincidentally, they started bashing on it right when I started teaching it heavily early in 2019. They're like, oh, it's going to eat into your returns and it's going to cost all this money. Yeah, that's true. We have been fortunate enough to find ways to get our insurance for free, but I'm creating that based on the reality of I know most people cannot stand to watch 40, 50, 60% of their account drop in value, right? So I'm basing strategies off human nature, with not theory, like, oh yeah, I'll be okay with it. No, you won't be okay with it. That's the reality. So let's base a strategy around that reality. Let's insure our portfolios so we can have that peace of mind. And then once you have that peace of mind in place, you'll find that, oh wow, I'm actually making a lot of money with buy and hold because I'm not doing all those emotional things that were messing me up, right? So that's what I'm working on, sharing with next year, strategies like that factor in the reality of people. Will it be easy? No. It's like anybody. You'll be like, oh, you want to focus on making more money. And I always tell people that's how you go broke, right? Always focus on making money. Investing and succeeding with money is a game of managing risk. You manage your risk of ruin, risk of losing all your money, like Trader Travis did in real estate, and you'll do just fine. All right. So moving on here, I'll leave you with 1 more minute because we try to keep these to about 10 minutes per person since Peter's not here. I'll just keep you for about 10 to 12 minutes here. So the stock market is going up. I've already shut down pretty much for the year. I shared that in previous videos. My performance here is it's going to wind up being 137% growth for the year. Not all of that is investment performance. I'm following the 5-year retirement plan blueprint. I teach Success Academy members, and that involves, part personal contributions, God contributions, get out of debt contributions. That's what God stands for. We followed Dave Ramsey's plan and we got out of debt. We took that money, we rolled it over to new debt, whatever. eventually you had a high savings rate. You're mastering the art of having a high savings rate, and that is difficult. I whined, I cried, I didn't want to follow him, but it was worth it. I have not met any person who got out of debt who said, oh, it wasn't worth it. Every last person says it was one of the best decisions of their life, which is why I always encourage everyone else to get out of debt. Is it easy? No, it's very difficult sacrificing. We didn't go on cruises, we got invited, so we didn't go out to eat with our friends. We sacrificed for just 2 short years. Short-term sacrifice, long-term benefit. 2 years of sacrifice, 40, 50, 60 years of financial freedom. Come on, right? It's a no-brainer. But emotionally, and I get this, right? Emotionally is hard because all you're thinking about is the sacrifice, and that sacrifice feels like it's going to be forever. No. Same with weight, right? Short-term sacrifice, long-term benefit, or either short-term benefit, long-term consequence, how it works, okay? Short-term sacrifice or short-term consequence, eating broccoli or green smoothies, right? I love them now. When I started, they were gross. Long-term benefit of health, okay? The opposite would be short-term benefit. I eat donuts. I love donuts. You put a dozen donuts in my house, none of them will be gone probably in a couple of hours. I have zero discipline with donuts. That's why we don't keep them in our house, right? So short-term benefit, right? I can eat whatever I want and not worry about eating fast food. Long-term consequence of bad health, diabetes, high cholesterol, things like that. So it feels good in the moment to do what you want, but there's always long-term consequences versus the opposite equation is I try to now lean more towards what can give me a short-term consequence but a long-term benefit. And so whether it's with weight or investing, it's the same thing. This 5-year retirement plan is a short-term consequence. We're not pulling money out this account. It started with 10 grand. 2 years later, we're at $60,000. We didn't pull anything out. It's tempting when you first do this to pull things out, to buy new cars, things like that. No. Short-term sacrifice of 5 years to get to a 6-figure account. Then from there, you hopefully can live off that income or give you some kind of sense of freedom or control, right? Anyway, all of that is to say that, hey, this is not just all investment growth. And I broke it out here. If you're part of the program, we've gone through this over and over again. I'm just doing this for the public. Now, what was I going to say next? Oh, I think my biggest winner for the year was Apple, right? And this is profile in the Market Club Options program. This is actually not, the performance was actually more because these call options up here, I didn't use my own money. There's a technique I use where it's called risk-free trading, where I try to get the stock market to give me money to invest in the riskier strategies like buying calls and puts. So the return, the actual return is infinite, but people can't conceptualize infinite returns. So I just show what I actually bought the calls for. Just know that this wasn't my money. I got the money from another strategy, right? So anyway, I invested $500, and then eventually we kept turning it over. So roundabout, the return on investment was about 422% return on my money from March to November. And Apple, I use this with Market Club. It does not even have an exit signal. Let's pull up Apple here. It didn't even have an exit signal. Apple is just raging higher. I mean, I could still be in the trade making more money, but because I shut down for the year, I'm missing out on that gain, and that's fine, right? You have to know when to call it quits. And at 100% growth, it is time to call it quits, right? There's no need to be greedy. Absolutely not. Besides, the end of the year sucks for trading anyway. There's usually not a lot of activity, not a lot of profit to be made. Usually. That's not a hard, fast rule, but that's usually. So this shows people, again, people are like, options are risky, you lose all your money. I'm like, if you follow a proven blueprint and you follow the discipline, hard to develop that discipline, but if you follow it, this is what can happen. And this just shows you some differences here. If you had $1,000, $5,000, or $10,000 invested in those call options for Apple. All right, so I took you a little bit over, but I didn't have much for you today because of the fact that I shut down for the year. But I wanted to say, hey, the market's raging higher. I'm not even going to predict. I don't know. I assume I'm anticipating some kind of pullback, but the market is just defying that. It's just unreal to keep going up this far. Predicting, that's what I'm going to say. The risk of being out. Think about this. Historical fact. Let's look at the market here. Let's pull up a 20-year chart of the market. Historical fact, we don't know if this will continue. The historical fact, the market goes up more than it goes down. We have more up years and more up months than we have down months. So I want you to think about something. Here's a visual for those who like visuals. Let me pull up a visual here. The blue is bull markets, up markets. The orangish is bear markets. The market goes up more than it goes down. So this is a principle. The risk of being out of the market is greater than the risk of being in the market. See, a lot of people are scared to be in the market right now. Is at an all-time high. And they're like, hey, what if it crashes? It can't continue. The risk of being out of the market is greater than the risk of being in the market. So you're thinking about if the market crashes right now, but not realizing that the market goes up more than it goes down. So even if you get in now and you lose a little bit of money, oh well, right? Historical fact is you'll eventually recover it because there's more up months and more up years than down. So with that being said, I just adopted the principle a few years back is that I will always be in the market in some way, somehow, right? Even if it's a 20% correction, I will always be in the market some way, somehow, because the risk of being out of it is greater than the risk of being in. Meaning I can suffer more pain being out of the market than I can being in it, right? A lot of people don't think that way. But that's why sometimes I'm always trading, right? Because I recognize this fact that the market generally goes up. Yes, the 20% correction that happened at the end of last year was a little nervy, right? I could see anybody could be scared, right? It's 20% correction. You know, if it go to 40 or 50, but you have to settle on facts, not emotions. And so you got to get out of your head and get into the facts. And that's one of the key points. You know, pullbacks are normal. When it happens, don't be surprised. They're normal. That's what I'm anticipating. I don't know though. You know, trading what I see, the market is going higher. So I would be opening bullish trades if I was trading, but I'm not. You know, mainly I'm updating my training and working on things like that to come out with a bigger, better version of our programs next year. And of course, I'm still in that U.S. investing competition. So I'm managing that account. I am trading in that account, that real money account, but I'm not really opening any new positions. I'm just letting my current ones close out. Like I am in Apple in that account, just waiting for that to close out and just managing my current positions, but I don't really plan on opening too many more positions in that account. And so we'll see what happens, because what I'm trying to do is I'm in a decent position at about a 20-something% gain for the year in that account. And I don't want to lose that, right? I don't want to get greedy and get risky and try to squeeze out 10% more by the end of the year and wind up ending with a 15% return when the market's up 20%. No, that I failed if I don't beat the market. So I'm trying to keep pace with the market, still in my low risk manner. So at least I can end the year around about where I'm at and not lose too much of that. So you all take care. Next week, Peter should be back with me, but I hope you found at least one nugget of wisdom in this week's recap. All right, talk to you soon. Bye-bye.